Ben Turner and I set up Turner Pope Investments about 18 months ago now, and our vision was basically to introduce our high net worth and retail clients to interesting companies on AIM. It's a sector we've been hugely passionate about. We've been involved for almost 20 years. We're now broker to 18 companies. We've helped to raise some £80 million in capital, and we've also assisted companies such as Venture Life as an agent, where we recently introduced almost £10 million in new funds. Due to the increased placing capacity we have, Turner Pope are seeing a significant level of deals. There's a number of the TPI and Turner Pope staff here tonight, so maybe if you'd be good enough to join us afterwards and you have an opportunity to speak to any of them at all, we'd be happy to speak to you, see if we can be of any benefit going forward. So, first off, we have Jerry Randall, CEO of Venture Life Group. Currently trading on the AIM, the ticket is VLG. Market cap at the moment is about £16 million, share price trading around about the 44p level. Now we have supported Venture Life for some time. We got involved raising money when the company acquired Ultradex back in 2015, and since then the company has made great strides. There's been a slight dip off in share price of late, but Jerry's going to speak about the company and tell you all you need to know. So without further ado, Jerry Randall.
Great, thank you, James. Can you all hear me okay? Fantastic, no response. So I'm Jerry Randall, CEO of Venture Life, founded the business back in 2010. I'm joined tonight by two of my colleagues, Adrian Crockett, who's CFO, and Dr. Lynn Drummond, who's our chair. So by all means, you can collar them later as well as me if you've got any questions. If you can hold your questions to the end, I'll go through the presentation, happy to answer any questions directly after, or I'll be around afterwards. So let me tell you about Venture Life. Excuse me. We're in the self-care market. We're a business that's got our own products. We sell our own products. They're marketed around the world. We sell in over 40 countries. We have over 85 partners. We had revenues 2016 of over 16 million. We made a pre-close trading announcement at the end of January. Our full results are on the 22nd of March, when you'll get a full update through Turner Pope and obviously our results release. And we also indicated recently our EBITDA for 2017, which is December year end, would be in excess of 1.7 million. And I'll talk a little bit more about the numbers as we go. Cash in the balance sheet at the end of the year was 1.3 million, the same as we had at June. We've gone through a period over the last 4 to 5 years of investing in the business, and we've been having a period of losses while our revenue grows. We've now got to a point where we stop burning cash, we start to generate cash and move forward, and hopefully you'll see why we're going to do that in the business. We've got 2 operations. One in the UK, just outside of London. That's our head office, our commercial business. We partner our products around the world. In the UK, we deal direct with people like Boots, Tesco, Sainsbury's, a number of the multiples. Outside of the UK, we partner with international pharmaceutical companies who sell our products on our behalf, who fund all the marketing, fund all the distribution. We manufacture the products for them. They get shipped to the customer. The responsibility is theirs. We have 99 employees in the group, 15 are in the UK. In Italy, just north of Milan, beautiful location. I know some of you have visited. You're all welcome to come and see. We have about 85 people there. That's a development, manufacturing, procurement, logistics, technical business. We're 5,500 square metres there. We produce 95% of the products we sell. We don't produce capsules. They're externally made. But these products you see here, plus lots of others, are all made in Italy. And they're shipped around the world, all the way from North America, Europe, Middle East, North Africa, Far East, into China as well. So that's a little bit of background on the business. The market we operate in, this is the self-care market. This is the market for everybody in this room, potentially, and ultimately. But it's where you'll go and buy the product from a pharmacy, you'll choose it yourself, you'll pay for it yourself, and you'll treat yourself. There's no reimbursement goes on here. You may have the recommendation of a healthcare professional. It may be a nurse, a doctor, a dentist, whatever, but you're funding that yourself. This is about taking responsibility for your own healthcare. And we can see here, there's a lot of demographics that are very exciting for us as a business. Self-care market on the right shows you the growth rate in some of the key markets around the world. The number of people over 60 is getting more and more and more. You'll see there, the 25 to 59 is the fastest growing bracket of demography for the world. And the problem is, you can see at the bottom, we're seeing it in this country, it's happening everywhere else. There's more medical need, more medical expenditure needed to be covered over more people. And we just can't fund that ourselves. So we've got to take responsibility for our own healthcare, we've got to pay for it ourselves, and we've got to be better at diagnosing up front and treating that in advance before we get to an acute or critical stage and the health service has to take over. So that's the market we're operating in. We're operating selling products like that around the world through pharmacies that you'll go and buy yourself, and you can buy some of our products here in the UK. So what does that landscape look like? Well, the self-care market is a $55 billion market globally. Now, if you look at other market sizes, oncology market, cancer market's probably 100 billion, diabetes 40 or 50 billion, dementia's probably even more than that. So it's a sizable market, and I know it's disparate, there are a lot of products there, but it's an interesting and sizable market. Interestingly also, pricing's not controlled by the health funds. Pricing is controlled by the people who sell the products. So you're not subject to a regulatory authority coming along and taking 80% off your price one day. You control the prices yourself. These are consumer products. As I've said before, it's all about diagnosis, paying for yourself, treating yourself, and that's the market we're in. Big players are realising the importance of this consumer healthcare. Reckitt Benckiser recently announced they're getting more involved in consumer healthcare. They're moving away from foods. It's a rapidly growing area. But if you're going to be in the consumer healthcare space, you've got to have brands, and brands need innovation. If you just stick with the same product, the same packaging for a long time, it will fade because innovation comes into the market. You need development, you need technical expertise for innovation. That's what we have through our base in Italy. So we're very well placed to capitalise on this market. This is a team, the beautiful one on the left and everybody else. We've got a team that's got a lot of experience through our industry. So myself, I've been in international healthcare since 2000. I founded a company you would know called Sinclair Pharma. Grew that up to 2009. I was also executive chairman of Silence Therapeutics, slightly different model to Venture Life, but a bit more aligned to ImmuPharma. And I was a co-founder of Venture Life. Sharon's background's in marketing. Sharon joined us from Sinclair. That's where I got to know Sharon. And her responsibility is commercial, her background's marketing, and she's responsible for the commercial operations of the business. You can see John Nuka lives in Southern Europe. He's got a better tan than the rest of us. And he runs the manufacturing facility. He founded that business in 1983. I've worked with him since 2001, and we joined our businesses together in 2014. And then Adrian joined us more recently. Adrian's got a lot of experience in the healthcare finance industry as well. So an experienced team. What does our business model look like? Well, it's all consumer demand led. So we don't just develop a product because we feel like it, or it's a nice idea, or we thought about it, sat on the beach. It's all about what do consumers want. And that comes either from our partners telling us we'd like one of this, we could sell this, or it comes from consumer research, consumer insight. But it's all about, is there a demand for a product, either because the existing products don't properly satisfy that need, or because there's no product that satisfies that need. And then we put innovation into that product. Innovation is all about formulation, it's all about using new ideas, regulatory strategies as well, because we don't want to stray into the drug category. That's very long time frames, high expenditure, and we're not set up for that. We're set up for shorter time frames, shorter expenditure. So we use the medical device, or the cosmetic, or the food supplement regulations, all of which are fully regulated. Once we develop something, we might do that ourselves for an idea, or a customer might come and ask, and we then make it. It's all about quality control, expertise, efficiency, throughput in the plant. And in the plant, we have an area where we make the bulk, and we also have an area where we fill up the packaging. We've got accreditation from all of the major regulatory authorities around the world, including the US, Middle East, Far East, China, Europe. And then finally, we distribute it. We've got a capital-light distribution structure. So we use partners around the world. They're long-term agreements, typically 10 years, minimum purchase obligations. They will take the product from us, they'll order it, take it from us. They will pay for all the marketing, distribution, and on-costs relating to that product. In the UK, we sell direct into those retailers, as I said. We do contribute to marketing in the UK, but we have a higher revenue that we receive per product. So that's our business model, meeting the demand from the consumers. We've got a strategy of what I would say steady, consolidated growth. We're not a business that's going to strike gold tomorrow and the share price will go up 10 times. That's not what we're about. We've got consolidated, underlying customer base, recurring revenues, recurring products, recurring cash flows. And to start with, it comes from our existing products going through existing customers in all the countries where we sell it, where they're growing it and they're incentivized to grow it, and through new partners. We're constantly signing new agreements. Also, we develop new innovative products. In 2017, we developed 3 new products, one in the area of fungal nail infections, one in the area of inflammatory skin diseases, and one in the area of, I suppose, UVA-related irritation. Also, we acquire products because we've now got a fantastic operating platform that we can now put more products, more revenue, more profit through. We don't need to increase the fixed cost base that we have, and we can probably double where we are from today in terms of revenue and still deal with it in our plant. And then we've got the footprint to build another building on top of that to double it again. So we've got plenty of capacity. And finally, by putting more revenue and more margin through that same fixed structure, you get accelerated drop through of that margin to the bottom line. So most of that gross margin will all drop through to the bottom line. That will go into cash flow, and that will increase our profitability. And you can see at the bottom how we've grown revenue over recent years. Some of our milestones, founded in 2010. We acquired the Italian business, John Lucas business, in 2014 when we came to the market. We've got a long-term exclusive agreement in China that's growing very well. I'll tell you more about that on a later slide. We acquired a product in 2016, Ultradex. I'll tell you a bit more about that. And then recently we've got FDA approval to manufacture OTC drugs in our factory in Italy. That means we can start supplying a lot more products into the US. And an OTC drug could be something like a fluoride toothpaste. In the US, fluoride is treated as a drug. So you can't make or sell fluoride toothpaste in without this drug approval. So interesting step, good development opportunities for us. And what you're really seeing is operational leverage at work. That's fixed cost base, increasing revenues, increasing margin, accelerating profits. And that's what you've seen. We've measured EBITDA profit here, but you'll see, and certainly in the market expectations for 2018, is that we'll be PBT, PAT, EPS positive. And we've invested through this business. The revenues are growing, the profits are growing, and now they're dropping through to cash flow and bottom line. Where do we sell? Well, I told you we're in 40 plus countries. Anything that's not grey is where one of our products is sold. Now, we may have one partner that we sell to in one country, then sells to 4 or 5, or we may have a direct relationship just straight into those countries. But 40 plus countries, the ones that are in grey, as you see, are not major markets. In turquoise are some of the recent events you've had this year, registrations, approvals, deals. And on the left are some of the partners we deal with. So you'll recognise the UK multiples. They sell our Ultradex brand in the UK. Alliance Pharma, some of you will know, that's based in Chippenham, it's a good customer of ours. Interestingly, Alliance Pharma now distribute a lot of products that they bought from Sinclair Pharma, which I actually developed myself when I used to be at Sinclair. Menarini, you'll know, big healthcare company. We've just developed 27 new products for them that they're starting to roll out around the world. That's because they want to use our technical capability to develop interesting products, register them, and then partner them out. So a very capital-light model with some interesting partners. We've got a lot of brands in our portfolio. We've got some key brands at the moment, and these are brands that we're starting to focus on. You'll all recognise Benecol. There's a poster here. We have a long-term deal with Benecol to manufacture a food supplement version, not the little milk drinks or the yogurts or the margarines, but a little food supplement version. We've made that both in terms of a capsule and a stick sachet. That's starting to sell. It's starting to roll out. It's early days. It's quite a long process with Benecol because it's a new paradigm. It's selling Benecol through the pharmacies, not through the refrigerator cabinet. Ultradex, our oral care brand, fresh breath product, bought that in 2016. When we bought that product, it was turning over 2.8 million. Revenues have been in decline for 4 years. Profit of about 200,000 off the bottom line. In 2017, that product will generate over 3.5 million or has generated over 3.5 million of revenue for us and over £1 million of profit contribution. And we paid £4 million in enterprise value for that business. So that's what we can do with brand acquisitions, and that's what we're planning to do in the coming years, to buy more like Ultradex and put them into our business. MycoClear, Rosacama, freshly new developed products. MycoClear's got a patent application over it in clinical trials at the moment. We know they work. We do marketing trials to support the marketing of the product. We've already done a couple of deals for that product to partner it out around the world. Rosacama for inflammatory skin disease, rosacea, affects 30 to 50-year-olds, about 10% of the population. NeuroAge is for cognitive function. If you can't remember where you left your car keys or where you left your car, you want to have some NeuroAge. And then Proctoese is, well, I won't talk about Proctoese because that's touchy subjects. So just looking at our commercial highlights in 2017, new distribution agreements, new launches of products. We've got record sales of our products in China. I've got a slide to show you what's going on there. In the UK, where we sell Ultradex only, when we bought that asset, the revenues have been declining for a number of years. We've now reversed that decline. We've increased the number of listings. We've taken it into new channels. The We've now taken it into the convenience channel in the motorway service stations and the road chefs. We've innovated, we've launched new products and new marketing campaigns. So that's a successful acquisition for us, and that's a template for what we plan to do with others. And we've carried on doing more deals. So as a company, you'll see regular news flow, signing more deals, products being launched as we expand our geographic presence. I'm going to spend a couple of minutes on UltraDex. It's our biggest single product, represents probably about 20% of our revenues. We bought that product in decline, neglected. We've now invested in new marketing. You might have seen it on the tubes, you've been on the TV. There's these dispensers around the room where you can try a sample of the product if you like. 12-hour clinically backed, fresh breath product. We've revitalised some of the packaging. We've increased our website traffic through our marketing. You can see when we bought the product, 1,600 users a month going to the website. Now, 34,000. And that's because we've re-engaged with a proper aspirational brand, properly marketed. We've done a lot of sampling, and we've innovated with packaging and with product. We've also taken the brand internationally. When we acquired it, hardly any sales outside of the UK. Our forte is to take things internationally: registration, distribution, commercialisation. We're now in 12 territories, including the UK, and we're in 4 of the 5 major EU territories, and our plan is to get the 5th sorted very quickly, and then outside. Our ambition is to reach 30 markets with that product by 2020, and we're on target to do that. The USA is in our sights as well. I've talked about China. In China, as I said, we have a product there called Labati. There's a poster at the back. There's some samples for you to look at and try. We signed this deal nearly 3 years ago. It's a distribution into one of the biggest markets in the world. Took a little while to get going, but this is the sellout data in renminbi, and you can see that's growing quite significantly. That's a product that we'd invested in. We've launched in China. They sell it through 2,300 of their own stores, private group. Their target's to have 10,000 stores by 2020. Maybe they will, maybe they won't, but if it's 5,000, it's still a lot. Premium product, and it's selling well and growing very nicely, and they're investing behind that product. So, what to look out for in 2018? Well, it's the launch of UltraDex in those countries where we've recently partnered it. More licensing deals across the world. We have a team full-time based on this. New business with existing customers. If you're an OTC pharma company, you might have 1,000 products in your portfolio. You won't have a factory that makes 1,000 products. It's entirely impractical. So use people like us both to develop, to manufacture, to register, and bring those products to you. So a lot of our customers come back to us and say, can you do this, can you develop that? It's exactly the same process, whether it's our brand or their brand. It's exactly the same process. We develop it, we charge them for developing it, we manufacture it, we sell it to the Mexworks, and we make profit from it. Growth in revenues. Market's expecting positive pre-tax, post-tax EPS this year. I'd have to say something if I disagreed. There'll be new products launched in the UltraDex range, both in the UK and internationally. Look out for those. And M&A. Why are we interested in M&A? Well, let's look at the scale of the opportunity. We've got a platform now that going forward is making profit and generating cash. We've invested in it, we've grown it, we've set it up. Now what we want to do is put more products into that platform. We can develop products and we can do that. We can also buy products and we can do that. So there's nothing that's going to turn up in the next few weeks, possibly the next few months, but we are on the acquisition trail. We will be looking to acquire more products. And the cash flow from those products will go straight to the bottom line of our business because we have the infrastructure, the capability to manage those straight away. That's the operating leverage we had. As I say, we can double our revenues now, and even with another building on our site, we can quadruple them. So we've got a track record of integrating acquisitions, choosing them, integrating them. We walked away from 3 last year that we looked at, decided not to do them. They were the wrong acquisitions. You've got to dodge the bullet because you don't want to do a bad acquisition. But there are plenty out there. There's lots we've identified, and we're working on them. So we think consolidating a number of acquisitions of size onto this platform from a very low share price as it is now. I know all CEOs say the share price is always low. It is really low. We're valued at less than 1 times revenue at the moment, which is ridiculous. However, we've got a plan and an opportunity to grow this forward, and our platform with selected acquisitions is going to go straight to bottom line growth, and that's where we are today. So thank you for your time. I hope that's been interesting, and happy to take any questions.